Good morning. It's Saturday, February 9th, 2019. I like to, over the weekend, go over the macro charts and just start from there. Everything just starts from there, and then we can down cycle down into intraday charts during the week to try to figure out what's going on. Um, I like to start with the yearly chart. This is the yearly macro chart. I've showed this a couple of times, showing the bullish and bearish cycles. The takeaway from here is the bullish cycles are much longer in duration, much wider in range, and higher in rate of change. So we've seen this market move from the 2009 lows, obviously to the 2018 top, and now we're in a period of what I would characterize as consolidation. So you're going to be probably a few years in this topping sideways process before the market reaccelerates itself to the upside. So within that construct, you're going to have these wider swings, probably and most likely contained within the 2950 top and probably, according to this chart, somewhere around 2200. So we'll cycle down into the next chart. Those are going back to this one. These are yearly bars. So these are yearly bars, high, open, low, close on a yearly basis, and then it takes into consideration the time between the bars. Now this particular chart is the yearly bars, which are the thicker candles, with the quarterly bars in between. So you can see the yearly bars and the quarterly bars. It's a little bit of a different representation. The interesting thing about this chart is that the market stopped exactly to the number on the inside of this projection bar from the '09 low. So although the market didn't stop as I thought it would on the high end of this bar, it did stop on the low end. So you kind of got a blow off through the bar. It stopped now on the bottom side of the bar, and we're really close to the top side of the bar. So I think we're probably going to go to 2770 to 80, according to this chart, call it 2780, which would be the top side of the bar, which would be the construct for this rotational structure. Now let's drop down to the quarterly. Here's a quarterly. These are just quarterly bars. Again, it's getting more refined, cleaner. Um, we can see the move. And again, we see this big candle, which stopped to the number on within this algorithmic projection box. So again, I'm thinking there's a pretty good chance that we're going to tag the upper end of this box and establish this range, which is 2780. Let's go to the monthly. There's a monthly configuration. Again, if we look at this is a classic continuation pattern. You make a high, you put in a V bottom, it slightly took out the low, and then you kind of continue up. This particular pattern is a lot different. You've got like a head here, left shoulder, and probably you're going to put in a right shoulder here. This is the makings of a reversal pattern. So from a macro perspective, monthly chart, this is what we're looking at. Again, we see the market stop to the number at the 2346 level, the inside of the bar. 2780 is the upside of the bar, reflex rally up to that level. There's a lot of structural resistance there. We can see that. So that's my number, 2780. That's what we're looking at. Let's get down on the weekly. We can refine it further, 2757 to 2800. That's your range. I'm going to even take this down further here in a second, but you can see here there's a lot of structural resistance here. This is a natural place for the market to come into solid resistance. And then if we even micro analyze the weekly one more time, it really comes down to a range of about 2770 to 2796. But I certainly wouldn't wait for 2800, which I think everybody's looking for. So I think 2770 to 2780 is your number. I think we get there sometime in the next 2 weeks. Um, if I had to take a guess here, I would say it would probably be somewhere around March 3rd to March 4th, which is a number, as a date that I have in mind right now. So have a good weekend, and we will talk to you this week. Thank you.